Shares in News Corporation surged ahead today after the company roared back into the black. Helped by the hit movie Avatar and a record performance from its cable television division, full-year earnings were just under $3 billion. Andrew Robertson reports.
Investors liked what they heard from News Corporation, which delivered a result even Chairman Rupert Murdoch found hard to comprehend given the problems facing the global economy.
I can't help but believe it stays very fragile, certainly the Western world. On the other hand, we have almost inexplicably good advertising.
In 2009, $10 billion of write-downs more than wiped out News Corporation's earnings. It was a different story this year, though, with full-year net profit beating analysts' forecasts and giving the share price a boost.
It isn't just an Avatar effect. This is also about the newspapers and the domestic television business in the United States also picking up and broad-based strength across the group.
The Avatar effect saw the movie division lift its earnings by 60%. The biggest division, cable TV, was up 37%. Newspaper profits rose 14%, while the best performing division was the much smaller HarperCollins book publishers, helped by 19 #1 bestsellers throughout the year. On the downside, earnings in satellite TV were affected by problems in Sky Italia, while continuing issues with the MySpace social networking website saw the digital media group hemorrhage more cash.
Since Facebook has arrived, the position that MySpace has had has been redefined, I think, by the market, the consumer market. More to the point, there's some questioning as to whether the type of organisation that News is optimal for a MySpace-style product.
In his commentary on the result, News Corporation Chief Financial Officer David DeVos singled out cable television, which includes the controversial and highly successful Fox News in the United States.
They now represent over half of the total company's segment operating income. We expect this business to continue to lead our overall growth for the foreseeable future.
Although newspaper earnings rose a healthy 14%, market analyst Greg Canavan believes the numbers reveal the challenges facing News Corporation in a world of dramatic technological change. In Australia, for example, newspaper income was down 3%.
This really goes to show how important it is for News Corp to get its digital strategy right. Rupert Murdoch's done a lot of work on charging for content, online content, and it's really going to be important to see how that strategy plays out, because that's really going to be the driver of the old media's profits.
On that issue, Mr Murdoch described tablet computers such as the Apple iPad as a game changer in which News Corporation must figure out the opportunities.
While the stock market liked News Corporation's results, investors shouldn't get too carried away. The dividend will only be 8.5 cents, and even after today's surge, News Corporation shares will still only be trading where they were in January 1998. And what's more, at the height of the dot-com boom in March 2000, they hit $55, 3 times their value now.
Which for Greg Canavan means choosing the time to invest is even more important.
I think News Corp is the type of company you want to look to buy at the bottom of the advertising cycle or the bottom of the economic cycle, and look to potentially take profits on as times are looking a bit better, as they probably are around about now.
News Corporation is predicting earnings growth this year in the low double digits, and it may be higher if the full takeover of British Sky Broadcasting goes ahead.